Welcome to Stock Market Explained. What if I told you that by the time you can buy a hot new stock, the best deal is already gone? That's the dirty little secret of an IPO. An IPO, initial public offering, is the very first time a company sells its shares to everyday people like you and me. Think of it as a company opening its doors to the whole world and saying, "Want a piece?" Companies have been raising money this way since the New York Stock Exchange opened back in 1792. And after a big stock market crash, the US government created strict rules in 1933, making sure companies had to be honest before asking the public for money. Here's the thing. Imagine you and your friends built the most popular lemonade stand in the neighborhood. You want to open 50 more stands, but you need serious cash. So you sell tiny pieces of your business to strangers. Those pieces? Shares. That first sale? That's your IPO. But going public isn't as simple as flipping a sign from closed to open. It takes 4 to 6 months on average. First, the company hires big investment banks, called underwriters, like Goldman Sachs or Morgan Stanley. Then they file a massive document with the government called an S1. Basically a full confession of everything about the business. Then the company's bosses go on a roadshow, touring the country, pitching their stock to giant investors like pension funds. Those big players get first dibs at the official price. By the time you can buy on IPO day, the price has often already shot up. Airbnb's stock was priced at $68 and opened trading at $146, nearly double, overnight. Here's the thing, your lemonade stand is blowing up, but to build 50 more stands across town, you need serious cash. So you do something wild. You sell tiny pieces of your business to total strangers. That moment, that's an IPO. Now think about this. Saudi Aramco went public in 2019 and raised $25.6 billion in a single IPO. That's the biggest ever. And Alibaba did $21.8 billion back in 2014. We're not talking lemonade money anymore. And here's the part nobody tells you. An IPO takes 4 to 6 months to pull off. It's not a switch you just flip. Then, after trading starts, insiders must wait 90 to 180 days before they can sell. That's called the lockup period. But wait, here's the twist that stings. By the time you can buy shares on day one, big hedge funds already got them cheaper during the roadshow. Airbnb's IPO price was $68. It opened at $146. Regular investors paid double. That's the IPO pop. So why should you care? Because IPO hype is real, and so is the risk. Studies show most IPOs actually underperform the market over 3 to 5 years. Understanding the S1, the underwriters, the roadshow, that's what separates a smart investor from someone just chasing excitement. An IPO isn't a guaranteed win. It's a process, and knowing how it works gives you the edge. Don't chase the hype. Chase the facts. Follow @Stock Market Explained for more.